All right. So last week on the show, I said I thought I was going to get to meet Caitlin Clark this week. Some would say the most dynamic, I don't think you can take off women, basketball player in the world right now. Like one of the most popular people in the world. She plays for the Indiana Fever. I was in an event this past Wednesday night, and I thought she was going to be there because she was involved in this. Alas, Dame, she was playing in a basketball game, I believe in Dallas. So she was not there. I was very disappointed.
Didn't even have the courtesy to zoom in?
She did not. Kristen, however, I did meet someone else that night that I didn't necessarily expect. And I'd love to share that with you now. I met Vice President Mike Pence.
Really?
Yeah. Yeah. And got to hear him speak just around the sort of the event that I was at and some words and this and that. Really interesting. Like I'd never, I don't think I have met him, at least not since he's been the vice president. And I will say his speech to about 200, 300 people, really engaging. Like, I was like, wow, I get it. This is an engaging fella.
Did he used in a prior life have a radio show?
He did. He had a radio show on our station, of which our flagship station, WIBC.
Good thing that I didn't say that during the first segment. That would have been embarrassing.
That would have been embarrassing. Yeah. But anyway, I without going into the politics of it all, engaging person. And I to say I'm surprised sounds like a left-handed compliment, right? Like I don't mean it in a negative way. It was just kind of refreshing. I didn't expect to be that taken. Is that the best way to say it? Maybe.
Sure. We are fed just nothing but series of sound bites. And so you don't really have a chance to sit down and listen and consume what somebody says and how they say it. So I'm not at all surprised that you find some people maybe not exactly what you were anticipating.
The most exciting part of that particular evening, I got to meet a remarkable woman by the name of Sarah Evans Barker, who's been a federal judge since the 1980s.
Ooh.
In the Southern District of Indiana. She was, I went and introduced myself because I've always thought very highly of her and the work that she's done. And I just thanked her for her service to really our country in a different way. And then she was the most engaging person there. She just kept going and was so present. And it hit me, she's 81 years old. It hit me that, man, we just don't make them like that anymore, because this is a person that clearly isn't consumed with their phone. This is clearly a person that is into people and what is happening in the moment. It felt almost like a religious experience because she was so incredible. She's seen so much. So yeah, that was my favorite part of the night, meeting the legendary Sarah Evans Barker.
Man, it sounds like an amazing event. Did you say what it was for?
Yeah, it was just a thing. It was a thing. So it was.
Good job, Damian.
Here's the thing. The Indianapolis Business Journal puts out a list over the last couple of years of 250 most influential people in the state of Indiana. Okay. They had a lot of people apparently fall off the list from the previous year, and I found my way onto this list this year. As my kids said, if they ranked them, you'd be 250. So it was a very nice honor. I really appreciated it, and it was fun. And I'll tell you this, and it was the spirit of the event, what Vice President Pence was talking about and some other folks were talking about, is there was a community leader in Indianapolis who passed away about a week ago by the name of Jim Morris. Jim Morris worked for the Pacers. He ran the World Food Bank. He was the U.S.'s delegate to UNICEF. Like, this is an amazing ambassador of just goodwill and getting stuff done. He helped build Market Square Arena, not with a hard hat per se, but with vision and planning. Anyway, he recently passed away. And so this entire event, the tone was this. You have 250 people in this room, other than Caitlin Clark, who theoretically can get stuff done with their networks and influence and all these sorts of things. And it was just like Jim Morris was this example of a person who did this. And as you go to honor his life, as they're talking about, it's like, imagine what the people in this room can get done together to do amazing things for the state of Indiana. And so that was really inspiring to me, right? Like, a lot of people in the room have used their influence or whatever to get things done and to get things done for the greater good. But if you really Avenger style put all those people together, and yes, I am Black Widow, that would be amazing. What?
I was Kristen was tearing paper or something, and it was I don't know.
No, it was me.
Oh, it was you.
I like that you blamed Kristen.
Well, she was leaning back and looking down. I thought she was doing whatever. I don't know.
So that's enough of that.
What was it again? Just one more time.
Stop.
I thought maybe they needed an MC, and they thought, well, the only way we're going to get them to do that is if we put them on the list and just have them show up.
Here's the best part of it, and this is what I really actually enjoy about it. I at one point won't be on the list. So that is to say, this is because you either stay on the list or you fall off the list. That is a thing. So it's not a fresh 250. In fact, this year, I think they said there were 71 new people on the list from the previous year. So that is to suggest next year at this time, and I will do it, I will come to you and be like, look, I'm off the list. I am.
And
I
they don't
love
rank
that.
them?
They don't rank them. And by the way, if they did,
Yeah, they must.
Internally, yeah.
Yeah, they have to. But like, I'm going to be off the list. And I kind of like that.
Yeah.
Oh, man. Okay. I love public failures like that, right? This, like my radio show, our radio show will get canceled at some point.
Oh,
And it'll be like, oh, what happened to the show? Oh, it got canceled.
why did it turn into our show when we're talking about canceling, but it's your show when you're talking about success? I'm not sure. Is this how you got to that 250 position, Pete?
Well, it's the royal we. Anyway, Kristen, big news week for you? Anything going on in your life?
Not much, really. No.
We know better. We know better. All right, let's do a thing called magic. How much yacht rock do you listen to, Kristen?
I would have to have a definition of yacht rock, but just based off of the name alone, I slim to none. I
listen to so much yacht rock.
Give me an example of a popular song that you feel falls into that genre. Well,
Benny Maldone's Into the Night, which is the creepiest song ever created, is definitely in there. Anything by like Michael McDonald, some Kenny Loggins.
None. I listen to zero
good.
yacht rock.
It is when Mrs. Planner and I are driving in a car trip, because then you're driving in a car. I don't know what that means. It is always on, and our kids are putting in noise canceling headphones to not listen to it.
I did secure Post Malone tickets though, so that's exciting.
Wow.
I know. I'm really looking forward to it.
All right. Well, that is exciting for you.
Me. There will be traffic. There will be people. There will be drunk people. Pete will not be in attendance.
But now, yes, that's correct. Okay. I don't know if I said this on the show recently or not. The number one reason I never want to go to the Olympics,
the people,
traffic.
Figured.
Like Mrs. Planner's dream is when the Olympics is in the US here in a few years, like she wants to go. And I was like, that's good for you. I don't really want to be involved because the idea of international traffic gives me cold sweats. But just let it rock. Okay. Are you ready to go? In 3, 2, 1. This week on the Pete the Planner Show, we answer your money questions. Here's how the show works. You email us, askpete@petetheplanner.com. That's askpete@petetheplanner.com. And here's what can happen. We can read your email on the air, and you will be honored with our words. Kristen Elanius, who was recently voted best person in the world. Hello, Kristen.
Hello, Pete.
And Damian Dunn, who didn't make that list.
Fell off this year.
fell off this year. All right. Okay. So let's hit the email inbox. We've got one that Kristen just loves this question. Kristen, should we tell Brian with a Y that you don't enjoy the question, or should I just like leave that out of it?
Cat's out of the bag there.
Good day, Kristen and co. Brian, yes, with a Y here again. I know Kristen won't let Pete make fun of the spelling like he has in the past.
Oops.
Sorry, Brian.
Brian. This email is from Brian. My wife and I, both 30 years old, recently welcomed our first child, who is now 4 months old. Timeout?
Sure.
Dame, I believe, I think that's when Mrs. Planner and I had our children when we were 30. I think you're kind of same age for you, right? Like right around that 38.
One of the people in my marriage was around 30. One of us was a little older.
Oh. With this major change, we've started our estate planning process, including evaluating life insurance for both of us. Currently, I have a whole life $1 million policy with an annual premium of $3,500 American dollars. I feel like I need another timeout.
I think you probably do.
Okay, Kristen, I just want true reaction here. $1 million permanent whole life insurance policy paying $3,500 a year. How does that just strike you? I mean, is it shocking that it's that expensive? Is it, I mean, you know, but I'm saying just like as a consumer of financial wisdom, what do you think here?
You know, you say, you know, but actually I don't have a lot of conversations in this space to feel like I really have a confident answer about how expensive that is or isn't. I don't come across a ton of 30-year-olds with whole life insurance, actually.
Dame, for a point of comparison, I bet the equivalent term policy, and by equivalent, I mean the face amount, less than $400 a year.
I bet it's a little bit more than that. I bet it's between $400 and $500.
Okay. Agreed. 450 was my guess.
So that is to say, this is a person, we're not judging that they're doing something wrong. I just think we're trying to give a voice to this idea that can be a shocking number to hear as we come through this. Let us continue. This is definitely a 2 segment. Question, Bran. My advisor presented an option to restructure this policy to add the ability to draw down the benefit for long-term care costs up to $20,000 a month and switch to an accelerated defined payment plan of $8,400 per year for the next 20 years. That's $168,000 total. I'm gonna power through here, although I want to kind of explain some things. In addition to this policy, we're planning to add $4 million in 30-year term coverage for me, $1 million for my wife. Thank you for not calling her your bride, based on our incomes and household contributions. The total premium for the term coverage would be approximately $3,700 per year. After some consideration, I'm exploring the idea of potentially dropping the whole life policy, adding another $1 million to my term policy, and using the $8,400 annual premium to self-insure for long-term care. Timeout.
Go for it.
Kristen, how can you hate this question? It's an amazing question. How can you, in our pre-production meeting, how can you say, I would rather quit the show than do this question on the air? How could you even say that?
First of all, Brian, I did not say that. And second of all, I'm really sorry that you felt like I was going to be the person to defend you and I didn't want to answer your question.
I calculated that contributing $8,400 per year for the next 20 years with a conservative 6.5% return would reach $1 million by age 70. I've attached a table of potential returns at different rates for your reference. Man, I'm feeling like, is Brian available? I mean, he said he's married, but I'm interested. Here are some points I've considered: tax implications on investment returns, potential need for long-term care before retirement age, advice from others. A person I spoke to who recently dealt with long-term care for their parents advised against self-insuring, expressing concerns about relying on our children to use the funds appropriately. While I understand this perspective, I'm optimistic about the values we will instill in our children. Am I missing anything? What do you think? Bleh. I'm sorry.
I'm sorry, Brian.
I'm not actually sorry. Kristen hates. Dame, what do you think?
I'm still trying to wrap my head around an additional $5 million in coverage for $3,700 a year. That seems steep to me.
Really?
$4 million on one 30-year term and $1 million additional for the wife. I mean,
the wife.
His wife, though. I'm sorry.
No. You're telling me. Okay. Well, okay. Let's do this real quick. Does anyone have a calculator?
Yeah.
I think I pay 85 for for a month for $2 million of term that I got when I was like 2.5, maybe when I was like 30.
It's, if my math is correct, which it could be wrong, it's $61 per month per million.
It does seem a little expensive.
Is it because they're now 30?
No, I got mine when I was 30.
Yeah.
I don't. It's kind of, and maybe there's some issues in there for rating. We don't know.
Sure.
It just seems that it might be a little much for that. But beyond that, my question, the self-insuring thing, I get. No, nobody really wants to talk about insurance and needs, especially long-term care. However, you may need that long-term care coverage before you have all that money saved. And long-term care costs are going to do nothing but go up between now and the time you are 70 anyway. So in face of increasing costs, you're not going to be able to catch up soon enough. If you can feasibly do this, I don't know. I don't hate it. I mean, it's expensive, but I don't hate it if you've got the means.
Kristen, there is a false binary here. Have you picked up on it yet?
Mm-mm.
That this person either has to get the life insurance that has the long-term care component to it, or self-insure from a long-term care perspective right now. That is a false binary, because typically in financial planning, it's not until around age 50 that you turn your attention to this. So, and even at age 50, there are numerous ways to accomplish your goals. And so I would say, arguably, it's cool if you can kind of do this, but I feel like it's way too early to allocate resources towards this.
Yeah, I would agree with that. I think this is not the time when we generally have these types of conversations. Usually we're having a lot more in-depth conversations about the statistics, oh my gosh, is a hard word, around becoming disabled, like long-term disability, short-term disability. Is your coverage through work enough? And they're talking about doing this, they're talking about their life insurance review, but this should be an adjacent conversation that perhaps intentionally wasn't part of this email, but I want to make sure that it wasn't unintentionally left out of this email either.
Dame, I have so much to say. This is definitely going 2 segments. 2 quick points that we may have to explain later. Number one, and this is not criticism, but it feels like it feels very judgmental. Clearly an insurance-centric financial advisor, quite clearly, because they're trying to solve everything with types of insurance. And the other thing here is that has not been talked about. Disability insurance should take care of the person's income prior to any long-term care coverage. So as a working person, your version, and it's not clean and tight, is disability insurance, not long-term care coverage. We're going to need to take a break. I mean, we are all charged up with discussions of insurance. Kristen's asleep. We'll wake her up. Dame's excited. And I'm Pete the Planner. We'll be back right after these messages from our valued sponsors. That seemed insincere.
It did.
A little.
Okay, we're off the air. Okay. I listened to the show on the air the other day. And I don't remember because I'm an older gentleman, but there was a commercial between our segments. I don't remember it. But I just remember going, gosh, I wish that wasn't on during our show. It was, I'm choosing words. It didn't really align with our thinking.
Love that.
That's not bad to say it that way.
Was it? I won't even suggest.
I'm not fielding questions at this time. I'm sorry.
Good idea.
I feel like we got a little bit of meat left on this bone, and then I think we go to this housing thing. We good with that?
Sure.
Kristen, are you good with that?
That's fine.
I know a that's fine that doesn't mean that's fine when I see one.
No,
Is that not fine?
No, it's really okay.
Andy,
No.
No. The answer is no. And I'm not putting that on the screen. I'm trying not to do that. What else was I had something else to share that was really interesting. And that's how the show goes.
Mm-hmm.
Anyway, Kristen, did you like having Dame in the glass case of emotion last week during the show?
Yes, I did. I think the show energy is different when both of you are standing. And I think that Damien needs to figure out a way to stand.
Dame.
Wasn't on my prime list this year. Sorry.
Yeah.
I tried.
Did you tried to stand?
I tried to get him to get the same desk that you and I have. It was on Major Deal for Prime Day.
How much is this desk?
When I bought it, it was like almost $300. It was on sale for Prime Day for like did I tell you, Dame? It was like $160 or something. Yeah. It was way cheaper.
I didn't put on my recording sign and someone almost just walked into the studio. I could see through the glass door. We would have had to cane them. Yes, Dame?
The problem is I have this huge desk in my office and I would have to tear it apart. So I started looking at like the desktop ones where you can raise and lower it. And
that's what Pete had.
I don't know. I just
award-winning podcast here. Actually, our podcast has never won an award.
I don't think we have.
Okay, I don't know.
Well, to know what.
Ben, get on that. Get us an award.
There's exciting things happening around these parts, your Moneyline parts, and maybe we'll talk about it in the next couple of weeks. Who knows? You know what I mean?
Free refills for McAllister's. Is that what you're talking about?
Right.
Okay.
Okay. Kristen is excited to be here. She's excited to talk about life insurance, long-term care insurance, and we're going to do so in 3, 2, 1. Back on the Pete the Planner show. Still on a question from Brian. Brian.
Well done.
Thank you. And should he at age 30 start making plans from a long-term care perspective by altering his overall insurance spend? That actually sounded really clever. Dame, what do you say? What's your recommendation here?
Before we get into that, Pete, you and I used to be in this general arena. Long-term care might have come up in discussions with some of our clients at one point. Did you ever consider it? Because we were the same age, roughly, when we were doing this. Did you ever consider buying it for yourself, knowing that you could secure a pretty substantial discount from the insurance company since you were selling that product?
Man, that's a great question, Dame. And I'm going to try to remember being 30. And so that's hard for me. But I would also say, I don't believe you could buy it. But also, long-term care insurance policies are different than they used to be. Back when we were doing this, there was just one type. You couldn't, there weren't hybrid plans that you could tie into your life insurance like Brian's talking about. So the one type that we dealt with, I don't think they actually quoted people in their 30s. If you bought it prior to age 45, I think you had to pay for the rates of a 45-year-old.
Interesting.
Maybe I never even considered it.
I did, because it was a substantial discount that I was offered, and I would have had that for, I mean, it wouldn't have been nothing per year, but it was something per year. Now, looking back on it, I'm glad I didn't, just because of how the costs have continued to escalate, because the actuaries can't keep up with all of the changes and costs, and they're not projecting very well. But I thought about it.
Kristen, I'm going to call a shot here that it's all anecdotal, but you know how I roll. You've been going to be in 3 meetings with me today, so you know how this goes.
Yes.
I believe there's going to be a massive financial and legal fallout within the long-term care insurance industry, because they're going to be unable to cash the checks that they wrote, if you will. Is that the right way to say it?
Yeah, it is. So
if you just joined us here on the most interesting radio show in the world, I'm making bold claims about the future of insurance. And Kristen, who is young and fun, is mesmerized by my wittiness.
Can you believe we haven't won an award?
So I actually do have two little nuggets, if you will, to contribute to this conversation. The first is, think about me, like
I do all the time.
Would you? Thank you. I can't imagine shopping for long-term care insurance. I just can't imagine that. And if I came to the two of you and said that I was, you'd have a lot of questions.
I wasn't shopping for it. It was literally just presented to me saying,
Brian
"Hey, we could." Well, yeah, Brian is, but I thought this was a shot back to me.
No, Brian.
Okay, Brian. Sorry, I'll take the focus off of me. We'll put it back on Brian.
Thank you, Brian.
Wait, can it be about me real quick?
Yes.
At age 46 years old, and I know the hairline is more, it's giving 62, but at 46 years old, I'm not considering making long-term care decisions right now on any level.
Yeah.
All right, Kristen, your second nugget, please.
My second nugget is there was something in here that we glossed over, which was about self-insuring and concerns about relying on your kids to fund your long-term care needs. And my question my red flag kind of there is, you said this seems like an insurance-centric advisor. And my thought is, wouldn't this advisor have solutions for this exact problem? Isn't this why the world of trusts exists?
Yeah, in my opinion, yes and no, right? Like, yes is an insurance-centric advisor isn't necessarily going to advise you legally. Right. And yes, you are right, Kristen. That is why the world of trust exists. So, yeah.
So if that is a concern of theirs, that's, in my opinion, take that back to the advisor and take that out of the equation. You should be able to address this and then close kind of like that loop.
Can we, before we move on, let's move on, but can we all guess Brian's income as a parlor game and he can send us his income?
Yes. Brian.
I'm going to go Brian's income alone. Where we don't know enough about Brian's wife. So we're going to go Brian's income alone.
I'm scared to say what I think it is.
Well, I need you to muster up the courage to keep the radio show going with your guess.
I have to go first.
Yes.
I think Brian makes upwards of 300.
At least 5.
I see.
Ooh.
That was my gut reaction, but I think that. Oh wait, Pete, you guess first because I don't want to.
I have to say, you guys both influenced my guess, though, so it doesn't feel fair.
Was less?
Yeah, and so but I now know I'm wrong. I'm gonna go in between. I'm gonna say like 375 is my guess.
Yeah. My gut reaction was 5, but then I thought Brian seems really conservative. So I think Brian is potentially overinsured. And so I think that it's less.
Do we know what Brian does for a living?
I don't think so. Something with Excel, apparently.
Okay. Kristen, it's come to your attention that you know of a situation around housing and housing choices that could benefit from a discussion of two very smart people on the show and me. So let's hear the facts. And we call this segment, Kristen Tells a Story, that we talk about on the radio with everyone that probably bridges 2 segments.
Wow. Okay. So I know of a situation where someone is especially looking both from what we would recommend and just societally, they are quite underhoused, meaning that the percentage of income they spend on their housing is low. And they have an opportunity to, in the near future and the shorter term, move to a place that better fits their needs. However, that will require a substantial increase in their monthly housing expenses. Affordable, but a significant increase.
Okay. Dame, I have a million questions, but I feel like you do too. And I feel like I want to defer to you. So go ahead.
The difference between what they are paying now and what they would be paying in the future, have they been absorbing that into their lifestyle? Are they very dependent on this income? Are they saving it? How available is that income?
That's a fabulous question. And the income is, for the most part, being saved currently for unidentified goals and then spent on fun stuff that they don't need.
Oh, I hate fun. Can we go back and forth with questions?
Yes, absolutely.
Okay. And Kristen, you may not know these because you know the story secondhand. So maybe you do, maybe you don't. Okay. So you say a substantial increase here at your money line. We like, in a perfect world of which we don't exist, because neither Dame nor I would have male pattern baldness, we like 25% of take-home pay going towards housing, 25% of take-home pay go towards a mortgage payment or rent. So it sounds like currently the person is below 25%. Do you know where those percentages go with the move?
That's a great question. It's I ballpark, because again, I don't know all of the exact details. I'm gonna guess like 30, pushing up toward 35.
All right.
It's not insignificant.
Okay. Well, let's think about that. And let's think about that really long and hard. And by that, I mean probably 2 minutes or so, because we've got another break. After the break, Kristen's going to tell us more tales of increased mortgage payments, stress, happiness, and love. I'm Pete the Planner. This is the Pete the Planner Show. I feel like that's the closest, Kristen, I've got you to almost laughing out loud in probably the last 6 years. I saw the smile. It almost blossomed into a chuckle, and then it subsided. Olympic coach Chris Plum, Olympic swim coach Chris Plum, my beloved brother-in-law, his worst quality, which I'm going to share with you now, is that he's a silent laugher. Full silent. He will be dying laughing, and I can't hear the rewards of my cleverness, and it's not fun.
So is he's showing like any physical signs?
Oh yeah,
like just
like he's laughing like a mime at SeaWorld. Like he is just like demonstratively enjoying himself, but there's no sounds associated with it. What a terrible person.
Yeah.
But
a little something for the effort. I mean,
I know, it's just like at least give a
yeah.
Sounds okay. Let's get right back into this because I love this question.
There's also another wild card. But you might have to uncover it. I don't know.
Oh, don't test our discovery.
Woman playing games with us. Go figure.
Okay.
I don't stand by those comments, but I sit right next to them. Okay, here we go. In 3, 2, 1. Back on the Pete the Planner Show, Kristen is telling us this lovely story about someone who is considering going from. That happened
to you? That's the remix edition, everybody.
What is happening?
Folks, I'm not entirely sure what's going on in the home office right now. But if Kristen, I'm going to record this on my phone real quick. There's no sound though.
It's happening to Facebook too.
Is it? I don't know how we
Somebody
sent Pete a message. Do you think he knows?
Oh,
do you think he? Can he let himself back into his own room? How does this work? How are we still here?
Because he owns the.
All right, everybody.
There he is.
Oh my gosh!
Did you get the full experience of that?
Back.
What just happened?
You remixed.
You froze, and it was just going from. It was amazing. You can see how popular it is in the in the comments. Fatboy Slim is going from heaven. That's amazing. Nice job, Eric.
Okay, so Kristen, what's the twist?
Wait, are we still on the
We're
segment?
not on the air.
You're not going to start that over?
No.
Oh. Okay.
Should I start it over? We're only a minute 20 in.
Start it over.
Oh man. Okay. In 3. Is my sound okay and everything?
Yeah, you sound great. She laughed.
But you
She
guys,
laughed.
as an improv performer of the past, when something goes that horribly wrong, my nature is to just roll with it and not start over.
No, you cannot put that on the radio.
Your producer would have used the best of for the third segment if you said
That would not.
All right. Well, and here we go in 3, 2, 1. Back on the Pete the Planner show. So delighted to be back with you. Kristen's telling us a story about mortgages and whatnot, and she's going to continue the story, and we're going to ask questions and figure out what we can figure out. Kristen, continue.
I thought you were going to ask me questions.
Kristen, what questions should we ask you?
Maybe you should ask about the personal circumstances surrounding this decision, something about the household dynamics. Maybe?
Yeah, are they going from a single household to a cohabitation situation? Are there going to be more than just two people? What's the dynamic of the folks that are going to be living there?
Dame has sniffed it out, which is that this is on paper a single income household that will be moving to a dual income household on paper.
So in even handling the change of mortgage payment, they're going to have to start sharing finances in some regard?
Correct.
Is that 33% you estimated, is that of a combined household income or still the one person's?
That's a combined income, and that's based on what a lender would use for their income. I have it on good authority that there are sometimes cash sources of income, but obviously a lender's not going to be able to use that for underwriting purposes.
Do you know if it's a 15 or 30-year mortgage, or they tell you that?
Yes, it's a 30-year mortgage.
Dame, how concerned in these situations do you get with trying to solve a housing challenge, then all of a sudden escalate how together finances are? Is that something you consider?
Sometimes I just trying to get a feel for the people that are in this equation together and seeing where they're at, what the future potentially looks like, how well they relate to each other with money and their circumstances. But this is just a common challenge that couples face all the time in the country. So it's part of the equation for sure, but it's not something, unless I see major red flags, that I make any comment on.
Yeah. Down payment wise, do you know anything about that? Or are they just going to take the equity in the current home and use it as a down payment?
Correct. And some cash savings as well.
Is the desire for a bigger space a real both desire and arguably a justified desire? Or is it just like, do you know if they're indifferent to it?
That's a really interesting point, because this is a longer term goal that was presented unexpectedly. The opportunity was unexpected.
Okay, Dame. Here's what I'm thinking. This person, according to Kristen, host of Kristen & Co., said that this person had been saving aggressively money.
Mm-hmm.
And Dame, isn't the point of preparation and planning to allow yourself to take advantage of opportunities when they present themselves?
Absolutely. But it's also one of the hardest things to do as well. We see that with retirement all the time, let alone opportunities where you may not be 100% confident in your path forward like this. I mean, if you're perfectly comfortable in your lifestyle, yes, there are some advantages to taking this route, but that also means that you're going to make some lifestyle changes too, which I think, I don't know how you would appropriately weigh that consequence of this decision, because you are so likely so comfortable in what you're doing right now that if it goes away, how much is that going to impact not only your enjoyment of the day-to-day, month-to-month, but maybe the general relationship with the person that you are now cohabitating with, if you aren't financially allowed to go and do what you're enjoying right now. Now you've got a whole bunch of other responsibilities. Man, this sounds like you were just jumping right into full-fledged adulting really quick.
Yeah, I was going to go there. I have a couple things, and Dame, that's where I was getting to is first, Kristen, do you happen to know which has the better upside from a real estate appreciation standpoint, the modest property or the bigger one?
The bigger one.
Of course. Dame, I feel, and we've done this a couple times in the last month or so on the show, I don't think it's a financial question.
Say more.
This is a relationship question.
Say more. My thing, so when I was talking to this person about this situation, the thing that keeps striking me as someone who's spent in the recent past, my recency bias is coming out thinking about the behavioral finance aspects. It's really hard to part with that kind of money on a monthly basis, even if you're kind of informally parting with it, because they're saving that money, but it's not money that's being forced to the equity of their home. They still have some level of access to those funds. And that's the hiccup for me talking to them about it is how do you come to a place where you say, all right, this is really hands off?
I have an idea.
Oh,
a legitimate idea. I may, for the first time in this show's history, have a good, helpful financial idea on this show.
Let us be the judge of that.
I forgot what it was. I'm just kidding. Okay. Run power percentage.
okay.
Because if you run our power percentage proprietary tool here at Your Moneyline, then what they can do is they can see the impact of this decision will have on their power percentage. The amount of principal being paid down in a mortgage payment versus what's being saved. Like, what do we think?
Man, but knowing what I know about power percentage and like thinking through this really quickly, I didn't do this with them. And that's really interesting because the interest on the mortgage, which you don't get credit for with power percentage, is going to bring their power percentage down.
Potentially. But I mean, do you know how many years are they into their current mortgage?
Only a handful, I think.
And is it a 30-year mortgage?
Yes, but they're not paying it that way. They're paying it on like a pre-established, like aggressive timeline.
Mm-hmm.
So, okay, now I think this is maybe turns back financial. If it's that aggressive payment structure, is that what is still below the 25%, or is the aggressive structure make it at or above?
The aggressive structure still is below.
Oh Lord, it's back to relationship question. How much have these people looked deep into each other's eyes and said, "I love you"?
I don't know.
Okay, I don't know.
I didn't ask them.
Felt like a thing. Send me their email and I'll ask them.
Okay.
Do these people buy small denominations of fast food gift cards?
There we go.
They do not. No.
All right, Dame, final call here. We got 2 minutes left in this segment. What is your recommendation? And if you are not willing to give one, what is the piece of information you feel like you would need to be able to say it? Yes or no?
I mean, there's just some questions there. I mean, you're talking about going from, it sounds like there is one established household, not two that are like two properties. There's one current property.
Right.
That, did we ask about the ownership of that current property? Do both people own that, or is it one person that owns that?
That's a great question. We didn't ask. And that is what I meant by on paper, it's a one income household. These things are legally one person's responsibility.
Oh.
And then they will legally be two people's responsibility.
And so that one person would be then selling this property and donating basically all of that equity to a joint owned property now.
Oh, Dame, good call. That feels
different,
like an escalation.
Yeah.
Correct.
Oh man.
If we only had another segment.
If we only had more information. I still feels like it feels almost like a legal situation.
So yes or no? You didn't say.
Lord, Dame, what are we doing? What are you doing?
I need more information, but I'm leaning towards be cautious.
That's not an answer.
What? He's not Zoltar or whatever.
I don't just spit out answers with coins.
I don't know what that means. That was Zoltar. I'm with Dame. I feel like I need more information. I feel like you could possibly solve this problem with legal paperwork that assigns the weighted purchase price or something like that. But what's with that? We need to take a break. Oh man. Coming over to the break. Biggest waste of money of the week in the news. I'm Pete the Planner. Oh man. What do people think in the chat?
They can still buy the house joint tenants and then keep track of who made their respective initial contributions.
Sure.
I don't know anything about that.
Or tenant common.
I mean, but that's what Pete's talking about. Just make sure that's all spelled out in advance. That's saying, hey, I am contributing this, but this is my cash.
Right.
And then any payments that we jointly make going forward, we split the equity that's built off of that.
Speaking of relationships, I had several girlfriends in middle school. When I was in middle school.
Good save.
Oh, it got so weird. I didn't even mean it, and then it came out, and then I mean,
it's
Kristen,
kind of a random comment just to drop and leave. I mean, that's it. Just say, by the way, I had several girlfriends in middle school.
Well, no, you're talking about like relationship dynamics, because to me, like, I've been married forever. Next week is my 24th wedding anniversary. I was a child when I got married. And it's like, so that's why, Kristen, I'm not more aggressive with my answers out of checking reality at the door of like, I don't know. I don't know what people do. Apparently they go to concerts and sit in traffic, and I'm not interested. Jordan didn't appreciate the flex.
Did that last statement you made, do we have to put a little
No, it was a joke gone awry.
Okay.
There's a whole disclaimer page on our website called with asterisks, jokes gone awry. We're doing some legal paperwork this week for some stuff. Man, so Kristen, do you know stuff about legal billing? You know anything about that?
Not a lot, no.
Dame?
It depends on where you're going with this.
Well, here's where I'm going with this. So I'm going back and forth with our lawyer about something, and he asked for information. I send him information, and then he comes back and says, awesome, thanks. And then I was going to send him back, thank you.
No, that'll cost you.
But then I was like, I mean, at what point, I think it's like a 6 minute. I think I've heard it's like a 6 minute. If it's 6 minutes or less, they can't charge you, or it rounds up to 6 or something like that. But like reading, thank you.
Yeah.
No, I wouldn't do that.
No.
So I didn't send it, but now I'm thinking, does he feel my appreciation?
Are you paying his bills?
Yeah.
Then yeah, he feels your appreciation. Or she, sorry.
I think he said.
I said he said he.
Okay.
He said he. Okay, are we ready for some things?
Of course. I'm ready to guess.
Okay. Oh, just got to my email. Don't open it.
Don't do it.
Don't do it. It's hard. Okay, here we go. I gotta share my screen. All right. Are you ready? In 3, 2, 1. This week's biggest waste of money of the week, right here on the Pete the Planner Show, is a Stegosaurus. It's a billionaire investor Ken Griffin, founder and CEO of hedge fund Citadel, purchased a late Jurassic Stegosaurus skeleton at Sotheby's on Wednesday. The 150 million year old Stegosaurus, named Apex, measures 11 feet tall and nearly 27 feet long from nose to tail. And it is nearly complete skeleton with 254 fossil bone elements. Griffin won the live auction in New York on Wednesday after competing with 6 other bidders for 15 American minutes. He intends to explore loaning the specimen to a U.S. institution, according to people familiar with his plans. All right, so there's some things that are important about this story. Do you want to know what the starting or what it was expected to go for? Is that helpful to you all?
I mean, should we guess what it was expected to go for and then what it was paid for? Or
yeah. Okay. So what do you expect a full Stegosaurus to sell for? Kristen, what's the going rate for a Stegosaurus?
I feel like one time on this show we did how much did it cost to even like have a chance to like dig up dinosaur bones, and it was like hundreds of
Yeah.
thousands of dollars. So to possess the individual bones has to be multiples and multiples of that. So the Stegosaurus was $5 million.
Okay,
This
that was
is this is the
sale
expected.
price.
Yeah.
Okay,
Yes.
Dame.
I will say $6 million.
Okay, Kristen, what did it sell for?
It sold for less than that. They were surprised that more
Oh.
people aren't interested
Oh.
in old bones. It sold for $3.5 million.
Dame, when she said people aren't interested in old bones, did you feel did that that felt like
It hurt
at us?
It hurt. Yeah.
So what was your guess again, Kristen?
3.5.
Okay, Dame.
I will say that Mr. Griffin got into a bidding war with other billionaires and other folks who see this as the ultimate trophy to hang over their fireplace. And it was $44.6 million.
Oh, Dame, is this in your news stories for this week?
Yeah, sure is.
What?
Oh, that's not fun.
Sorry.
Boo this man.
Ooh,
It's
tomato.
6 million and 44.6.
Yeah, that was right on the money. Look at that.
Shocking.
Reading's important, friends.
It's amazing what you can do when you have insider information.
Not fun, Dame.
Oh.
Hey, Dame, way to ruin the show. Good job.
I have a question about that.
Yeah.
Ruining the show?
If you guys had that kind of discretionary income,
Sure.
It wouldn't be a dinosaur that you bought, right?
I think you buy everything at that point.
Yeah.
Like,
I mean, why not?
yeah.
Like, why?
Why not?
I'd buy Wyoming. You just like you buy whatever you want.
I guess.
I'd buy that house for that couple that is deciding whether they're in love or not from the last time.
They would
Dame,
probably appreciate it.
Reality
Dame,
show. Yeah.
Dame, what's in
absolutely.
the news this week?
There is a new interest-free, penalty-free option if you need a quick $1,000. The Internal Revenue Service has now made it easier to take a limited amount of money out of a traditional retirement account penalty-free. While previously you could tap your savings without penalty in more limited ways and often with more paperwork, you can now take out up to $1,000 of your funds for any self-defined emergency. The change comes after the IRS spelled out what counts as an emergency personal or family expense under a 2022 retirement law that went into effect this year. The reasons can include medical care, funeral expenses, and auto repairs. But the key phrase is the catch-all, quote, any other necessary emergency personal expenses. The $1,000 provision is different from other retirement account withdrawal options because you can just say you've got an emergency without specifying what it is. So you can get the money faster. It's one of several ways Congress keeps making it easier for people to use their retirement savings as emergency funds.
Is it a withdrawal or a loan?
It's a withdrawal, but it can be repaid.
Okay. And is this only, they have to be your vested contributions, I presume? You can't take your employer match?
Yeah.
Here's the thing. I know everyone's got different financial situations. And so this will numerous times truly help, not subjectively help, but objectively help someone. So that is great. I also believe, like everything, it will be somewhat abused and will be problematic. Kristen, it's interesting to me that given that Congress won't even solve the impending Social Security cliff, now they're theoretically making it worse by making illiquid assets liquid sooner.
Yeah, I don't disagree with that. And I really wish I understood the motivations behind why this is something that demands attention right now, because it seems like there are some really, to your point, more critical decisions that need to be made. And it just kind of makes me turn my head a little. Why now? Why this?
Yeah, it's interesting. Dame, what else is in the news?
The number of new in-ground residential pools built in 2022 was...
in the United States?
United States.
Okay.
Remember, 2022.
That's when people were still flush with cash from the advanced child tax credit.
All sorts. I mean, yeah.
All right, Kristen, what do you got?
You have to go first.
Okay. 2022. There's like 100 people in the United States. I'm gonna go. Oh man, 100,000.
There were 150,000 in-ground pools.
98,000. That's amazing.
Oh my gosh, I didn't even cheat like you do.
Yeah, that was down from 117,000 the previous year, according to PK Data and the Pool and Hot Tub Alliance. By the way, I bet they have just banging conferences, the Pool and Hot Tub Alliance.
The Pool and Hot Tub Alliance. I've got to be the keynote speaker at their annual conference.
Make it happen.
Can we get this done? I mean, because there's no one likes being in a pool or hot tub less than me.
Yeah. Yeah. The sun, the water, the people. I mean, there's all three things.
Dave, you're a family of swimmer. Oh, your kids are swimmers.
Yeah.
You're at a public pool. Are you getting in the pool?
No. Why would I do that?
Well, are you enjoying yourself in the hot weather with your shirt off or no?
No.
Okay, me neither. Like swimming in public feels like a very intimate thing to do. Kristen, out of respect and prudence, I'm not going to ask you the same question.
Okay.
But Dame, I would about once a year, my kids want to go to the neighborhood pool and they're like, yeah, can you go? They want me to go. And I go, but I go like at 8:30 at night where there's low light. And I get in the pool very quickly and I squat down. So just my eyes are hanging over the edge like Wilson from Home Improvement.
Yeah, absolutely.
All right. Oh, Sarah Renfro, the Rev, ask about the beach. What about the beach? No, I'm under whatever shade we have. Full sleeves. No, I'm not interested. No, thank you. Dan?
I'll get in the ocean, but it's full sleeves and shorts.
Oh yeah. One more story, Dame.
I didn't start my stopwatch, so I don't know how much time we got.
We have 1 minute.
All right. The price of a first-class postage stamp went up for the second time this year. Pete, wait. Kristen, do you know how much it costs to send a first-class piece of mail?
Is it 58 cents?
Peter?
I'm pretty close. I'm going to go 60, but I think it's somewhere in there. I wanted to say 54, but that was years ago.
It now costs 73 cents to send a piece of snail mail.
Gosh, I'm going to go
an email
broke. That's why I drive my mortgage payment to the bank every month. And I have to buy premium fuel. So believe me, I am saving money hand over fist.
Yes.
And there are also electronic payments that I could do.
Of course.
Are free. All right. That's all we have time for on this week's show. Please email us. And in the email, ask us financial questions. And the address you might use is askpete@petetheplanner.com. That's askpete@petetheplanner.com. Don't call us. And we will answer your question possibly on the air. I'm sending you good vibes because good vibes are all that's in the budget. I'm Pete the Planner, and this has been the Pete the Planner Show. That was weird. I don't know why I did that. I don't know why I do anything. Kristen, so what are you going to go back to your friend or via email or call them or whoever? I don't know if you're especially close to this person, if you heard it like secondhand at a Post Malone concert or something, but what do you tell them that based on what we said? Or do you say, I asked two of my friends and they're not very helpful?
I actually already put them in our group message and they're going to ask you guys themselves. Gave them your phone numbers.
Please don't. Kristen, form of communication preference list. Here are your options.
Okay.
Brief phone call, text message, email, knock on the door, face-to-face chat, or fax message.
What's the context? I mean, like, can you give like what kind of communication has to be?
Like technicality.
It's very important.
How have you been?
If it's a text message, it's getting ignored probably.
Wow.
So let's start. A brief phone call would be preferred.
Wow.
Answer, address, done. And then a text, an email. There was something else.
Face to face.
There was face to face
and then fax machine.
Fax machine show up at my house.
Wow. Well, Dame, I'm so glad we're here.
Please don't come to my house unless you're invited.
Stunned. They said Did you mean show up at somebody's house, Pete? When
Yeah, Kristen.
I thought you meant.
I can't believe it. Dame and I are going to go very different here. Dame, what do you got?
Text first.
Yeah, 100%.
Email and fax are like at the very bottom.
Oh,
I try and ignore emails almost as much as possible anymore. And fax, I don't even have one of those. So just feel free to send me all the fax you want.
I think it's text. Oh, go ahead, Kristen.
I didn't say I knew how to use a fax machine. I would rather the correspondence get lost than for you to randomly show up at my house.
That's fair. Kristen, I'm going to go with text first, then email, then phone call, then fax, then show up at my house.
Yeah, don't show up at my
Although
house.
that being said, Dame, you did show up at my house once because you were in town, and I loved that. That was like amazing. Do you remember that?
But I think you kind of knew that I was coming, just not when, and it just happened to be really late at night, and you kind of creeped up alongside of the house and jumped out, and yeah,
not at all weird.
I wasn't invited in, but
was it during COVID?
Yeah, it was.
Okay.
Yeah.
All right. Speaking of COVID, I don't know. I didn't know where to go with that. I was going to say we've just tested negative for humor. I didn't know what to go with.
It wouldn't have been bad.
It wouldn't have bad. Kristen, thank you so much for your life. And Dame, thank you for you. And everyone else, stay getting money.